What is going on, everybody, and welcome to another technical analysis. What I like to do in these videos is provide you guys some technicals on some of the stocks that I am looking at, or some of the ones that I most commonly look at, to give you an idea what to expect as far as entries and exits on stock tickers. So if that sounds like something you're interested in, consider subscribing. Go ahead and drop a like, and let's get this thing kicked off. Now, as you can see right now, what we're looking at is we've essentially broken the trend and retested it. Now, typically, what happens, we start getting some pretty heavy selling, at least probably like 75% of the move on a normal move. Again, you have to understand this is why I also do weekly analysis as well, because I want to see what is scheduled and what is coming up, because it kind of falls in line when these target areas, when you hit these target areas, normally an event is triggered with that essentially in that target area, and then that's when you get a turnaround. So as of this week, we don't really have anything bid. We're kind of really just setting up. We do have Wednesday is a big day. We do have Powell in the morning. They've got FOMC meeting notes. Again, they're not going to be really big, but you have to understand that we are getting ready to report earnings next Friday. So the market is setting up for that. So that being said, we are currently essentially sandwiched between this 5,500 mark and the 5,435 mark as of right now. To be honest, it would not surprise me if we kind of hover around here to get through earnings, as a lot of times we are front running um, by events, by essentially the industry leaders that are reporting. And not only that, but we also have potentially a lot of information being disclosed all at one time to hopefully kind of let it get lost in the sauce for retail traders and for people out there, so they don't really understand what's going on. That's why I have this channel, to try to kind of point some of those things out. So that being said, it would not surprise me if we continue to sandwich here unless we get news. That's again, that's something that switch. Again, what we're looking for in this event that's going to force the Fed to have to cut multiple times. So when I say multiple times, we're looking more than a 25-point basis move cut in rates. So when that event occurs, the Fed will announce it, and then you'll start pricing in a recession. If it's you're looking more for like a 100-point drop at that point, then the yield curve starts uh, correcting itself, and then from that point you start pricing in a recession, because there is a new theme, a new narrative steering the market. So you have to be ready that that could happen at any point. For the next 6 to 12 months is going to be extremely important. The market will correct. Essentially shit's going to hit the fan, and then what's going to happen is essentially housing and all that will follow suit over the next couple of years. So just keep that in mind. Again, none of this financial advice, but being said, uh, until earnings, I can see just the general index just chopping along until we get some new news. Aside from that, I think individual stocks could start running up. I know Tesla got some upgrades and started to run. So just keep that in mind. So we'll see what happens here. But technical wise, we did break the trend. We retested it. That should essentially could cause us to fill this gap here. So we may even see a drop down to the 53.73. That would be a normal drop. Again, you got the 20-day EMA essentially roughly around this area. So that would be for a good balance. This is the first actual real retest after re-breaking it and coming back through. So just keep that in mind. So I wouldn't be surprised if we do get a little additional selling. I don't expect anything. Expectations are extremely low. So the fact that they beat these low expectations causes stocks to individually rocket up, when you have to understand that, well, again, the top-down approach and what's actually going on. Because again, these earnings are siloed compared to what's actually been going on. A good example of that is Apple. Apple has had horrible earnings. They've gotten rid of a lot of their new product lines, right? Their Apple Vision Pro 2s have been delayed. Again, they stopped making the Apple vehicle. Now they're focusing on all their efforts on AI. So you have to understand they had what was it? Had quite a high number, historical number of buybacks as well. So these are things you have to keep in mind and understand what the underlying theme is that is currently playing out. So again, I wouldn't be surprised if you do fill this gap. You would want at least that. That's not to include any kind of pricing in a recession. So that's kind of what we're watching, is this area down here. And again, the top area mostly just to see if we do break to higher. Again, if we do start grinding up, it's definitely not a good sign, just because You look at the grand scheme of where we've been since October, we've essentially just gone straight up. So essentially, when we paused, which was right here, if we did not pause, again, this is why events are important. If we did not pause there, we would have started making new lows because we were coming down with some momentum. And again, the cuts or the pause helped us. This is typically what happens when you pause. On every cycle, you will always see a pause, and the market rallies because of that. And then you price in a recession because of the events. You defeated inflation, which isn't really defeated at this point. It's better than it may have been, but the problem again is if you cut too soon, then demand comes back too fast, and then they start raising, and then you're going to have to repeat this whole cycle all over again. So with that being said, we will wait and see, but as of right now, we've been nothing but up. So we'll wait, and then when we start correcting, some people are price predicting around the 3,200, the 3,400. So at least trying to revisit this low or potentially close to it. Again, on average, you are looking at essentially a 45% correction, which that one does not show that. So it's typically on average is about 40%. So 40% would bring us way down here to 3,200, which is on average of a recession. Again, a lot of things that are at historical numbers. So there's always the possibility of it happening. Again, when we start really selling off, the thing is you just want to kind of let it play out and sell off for at least a solid month, right? Once we start pricing a recession, you have to understand once the Fed rapidly cut rates, that's when you kind of let it sit and simmer and let it sell off quite a bit, and then you start purchasing the well-known brands, because a lot of corporations are going bankrupt right now, so you have to be very careful about that. So that's what I'm looking at there. So this week, not expecting a lot, expecting it to play those these two zones, and then we'll see what happens to go from there. But otherwise, I think we will continue to chop in here at least for the next week. When we start getting earnings that may break us one way or the other. Again, the odds are leaning more towards down since we've been kind of flirting with this 5,500 mark for quite a bit. So now when we take a look at Bitcoin, again, it's still playing much like gold. Gold and Bitcoin look almost exactly alike. They've been in this channel for quite a while. Expect it to hold here until we start pricing in recession. Again, when we price in recession, I think Bitcoin could go back down to 45K, potentially hold there for the bigger bull run, which again typically happens after about 6 months after the halvening, which would again put us into the roughly closer to that new year. And then at that point is when we're kind of expecting the recession to be priced in everything. Ultimately, what they want to do, we should have had a recession a year ago. They're postponing that recession. The longer you do this, the worse it's going to get, because what you're doing is, again, suppressing the consumer. And then once you want the demand to come back because things are so bad, you start printing money. That doesn't automatically mean the consumer is going to come right back. They have to build confidence to want to come back, and then that's where we start having major problems. So this is what you have to keep in mind, how long the cycle takes to play out. So again, when we come back down here, hopefully the consumer doesn't last too long, although I think Bitcoin will probably more likely wick out of here and then probably start pursuing up. I think it has a shot to 100K, but again, you have a lot of institutional buying now because of the spot ETF. So we'll see how much that actually pushes up Bitcoin. Now you got ETH, and also you got ETH and you got Solana as well, spot ETF. So that are in potential talks. So those are two other things you got to be mindful of moving forward. Now gold, like I said, it looks just like Bitcoin. I think gold will take potentially a dive down to the 200, maybe even the 190, and then potentially start running up. And this is hard to really dictate, especially when I think this might actually break out as opposed to Bitcoin. When the market starts selling, I think Bitcoin will drop. I think gold could potentially rush. The biggest thing you have to understand too is that When you're talking about fear, everything sells off. It doesn't matter what market you're talking about. Leading up to the event and the anticipation of it happening can cause it to push up. But then once the actual event occurs, there's just massive fear. And so at that point, just everything starts selling off. Everybody liquidates everything. And so that's prime time to be buying. So again, I think that will happen sometime here within the next 6 to roughly around 18 months. I think you're going to start seeing everything correct. Automobiles, housing, the market, all that correct. Again, the market will correct and essentially recover much quicker than the actual market is. Housing market, I think you still got like 3 to 4 years. I think over the next decade, the housing market's going to look dramatically different. As again, a lot of the boomers will be retiring and selling off additional properties and stuff like that as well, which is kind of what this held up a lot of this as well. So we'll see how that does play out. But so looking for big moves in Bitcoin and in gold here coming in the next 6 months, probably even sooner than that in those particular two commodities there. And then you're also looking at Tesla. Tesla's gotten some really great news. It's been consolidating quite a bit. And then you have Wall Street really pushing for Tesla and AI and humanoids. There's just a discussion just yesterday came out from essentially Morgan Stanley talking about how humanoids is going to be a lot bigger than FSD. So after we've talked about that for so long, during this whole choppy period, I kept saying this is the one you're going to want because that's going to be the next AI boom that NVIDIA had. Tesla's going to have that with FSD and with humanoids. I've been talking about this for a while, and you have to understand that it is a huge industry, and they are way ahead of everybody. And again, you have to mass produce the robots. Again, their AI is the best. I believe they also have some of the best training data. Nobody else has the amount of training data that Tesla has for FSD and for humanoids for that matter. So again, there's a lot of real world data that they can use. So again, I think this will be here in another year or two. This one's going to be absolutely explosive. In the predictions that they have, I think it will be very, very high. I don't like predicting prices, but I do believe that it is primed to have the best outcome out of all the big tech in the near future. So, and I'm talking more like, potentially the next year or two could get that hype from FSD and humanoids, but ultimately, I think big prices that I've been talking about more like 5 years, maybe even 10 years, but they have a huge growth potential over the next 5 to 10 years. So really like this one. The consolidation is good. Does need to break out of the 200. That is holding it down. But again, like I've stated, you have a bigger wedge here. So I believe this is going to be a massive move up. And I think it will break new all-time highs when you start getting that leverage when you're talking about FSD and everything else. Now, we price it in a recession. I think we can come back down to this 160 level. We can been kind of bounce between that and the 200. We're holding this, again, this weekly wedge very well. I think we may see quite a bit more choppiness in between here, but once it actually starts breaking out on some of these bigger time frames, I think that's when you get your massive rip in Tesla, at least part of it. I don't know. It depends on the momentum. It's always about momentum with Tesla. And if they can continue to get FSD rolled out and actually have it implemented, obviously that will help a lot. And then the hype with humanoids isn't even priced in yet. So just imagine how massive that could be. So now, Palantir, this one keeps playing this trend line. Been rather annoying. I really do like this one. I've been in and out a couple different times. But ultimately, right now, for me, it needs to break the 21. It needs to break the trend and come back down, which I think we start pricing in recession. Palantir will correct. Will we see $5 again? I think if we get anything under 20, would be fantastic. But again, we don't know how bad the recession is going to be. On average, it's 40%, but we don't know how big of a hit tech is going to take. Tech does typically get hit pretty heavy. But ones like Tesla have corrected so badly over the past 2 years almost that it has a lot of it already priced in. But some of these run-ups that like Palantir's had, I could see at least try to correct at least 50% of this will be my entry for Palantir. But as of right now, again, the top really being that 27 mark. We'll see if we can break that. Otherwise, if it can't break it this time, it's had it multiple times, may start looking to break towards the downside. So that's what I'm kind of watching there. Amazon, I do really like Amazon as well. Shop, Palantir, or PayPal are big ones. This one obviously very overextended. I do have this on the watch list, but I want this thing to correct again and then go from there. Well, we see 80, 81. It's hard to tell. It's doing very well despite everybody else is getting absolutely hammered. But again, they have their own ecosystem, so that does help a lot. But I think if this thing can correct, we could potentially see 120 at least. You have to look at the ones that have a lot of meat on the bone, and this being one of them. So when we price in a recession, you have to know where that fear is going to essentially sink its teeth into and start selling off heavily. So I do believe Amazon will be one of those as well. Then you have PayPal. PayPal just again continuing to chop in the zone, but it's held the zone very well. I think it's only a matter of time before this thing really starts breaking out. I do believe we could potentially hit 50 again. But again, their numbers are doing a lot better than where they were. Again, they have a huge customer base. The new CEO, I like I've stated many times before, I like the new CEO. I like their direction. They're making things a lot simpler. You have to be a lot simpler during these particular times, and that's what he's doing. He's shifting the focus of the company, and again, really like where this is being set up and the consolidation. The longer we continue to play in between roughly the 66 and this 58 is prime, because when it does break to the upside, it will be massive. And I've talked about this before, is you can get these liquidation spikes down to kind of freak people out, and then that's when it turns around and starts ripping higher. So I do want to bring that up because I think that is what's playing out here. And I normally play these particular plays all the time, and this is what you always see is massive consolidation, just like we saw in Tesla. And then you get liquidation spike, and then you get some consolidation, and the thing runs up. So, and it happens very quickly. So that's why a lot of times they tell you to hold in DCA, especially when you see massive consolidation on these higher time frames like this. That means that move up is higher. It's not saying we'll reach 300. That was a bubble for everybody at that point, but I do believe you could see a very high potential, potentially 200, if not more, moving forward. So again, someone I do want to watch. Snow, I've been bringing this one up as well. I really do like Snow. It's a great buy zone here at the 130 mark. It looks like we may be turning to the positive side here. And so watching this, I think our good target would be 200, but potentially even higher than that. If the market wants to churn and starts running, again, we have to see how this reacts during the recession period once all that fear is priced in. If it does continue to hold this, to be a prime for buying, and then continuing, this thing could potentially run back up to all-time highs, if not higher. So that, again, you got some really good stocks that are great for buying right now and moving forward. So you want to be buying stuff at discounts and not buying stuff like Nvidia that's already rode up. Even despite the stock split, people are still buying at these high prices. I do like Nvidia, but it needs to correct. And you have to understand, this is the way Nvidia works, is they do have massive spikes, and they get long periods of just nothing happening, and can frustrate a lot of people. And then it finally really starts to break out. So, and again, they just recession-proofed their stock by doing a 10-for-1. So that's how that typically works. So let's take a look at BA. BA is a big one, continuing to consolidate. Again, there's a lot of drama around the stock. We'll see what happens if, for some reason, the Fed do take over. This could cause the stock to skyrocket despite all the issues and concerns. I know the CEO was in front of Congress over the past week and had a lot of questions. So it'll be interesting to see what happens with the stock. But again, it's backed by the government. So if it does sell off, I'm not expecting to sell off too horribly bad. Could still see a revisit of the 125, maybe even the 100. But I do believe it will recover because of what it produces plans for the government. So the government will just essentially oversee everything. A strong possibility. This one, I do really like this one as well. PAL is good for ammunition. They do have like tracer rounds and stuff like that essentially the military use. I do believe with potential war on the brink, this could be a potentially good buy. There's a lot of risk because it is considered a penny stock, so you have to keep that in mind. But I do like that it's kind of in the buy zone right here, even if it's just a small position. Then we could get a massive run up, especially in the next couple of, if you want to hold this for a longer. A longer position, I think we could potentially hit like a 6 or a 9. But again, this is definitely a longer swing. But again, good positioning here. Again, it could go a lot lower. We don't really know. Again, a lot of things are forecasting really bad, bleak 6 months. So you do have to keep that in mind. Again, none of this is financial advice as well. But ultimately, I do like this as potential buy here moving forward, as it could a little could go a long way in this particular one. So don't put in here what you do not you're not willing to lose and go to zero. Anytime in any position I talk about, you have to be prepared to be okay with losing whatever goes into that. That's why I only typically point out a lot of the blue stocks, because of those strong names, and it would be very difficult for a lot of these bigger companies to go belly up like these penny stocks. And again, you have to manage the risk and the position size. So this is risk management. And so again, given the position that you're taking, you need to always consider that when taking position before getting in a position. Then you have JPM, again, still somehow holding this. Even with all the bank stress tests that came out this week, I didn't even look at them. But again, it's all just pencil whipped anyway, but it's still managing to hold the trend line. We'll see if this continues or not. But if it does break down, seeing for this to potentially correct the 155. Again, if we get massive fear, who knows where we can go. It could get really bad very quickly. But again, this is why they try to filter it and kind of cascade the bad information, because the more they can do that, the better off they can stop essentially just a sheer just crash, right? Because if they just let it go and they didn't have any controls in place, the market would crash very quickly. So they have a lot of controls in place for doing this. They can halt stocks, they can halt the market, they can close the market if it keeps falling too rapidly. So you have to keep that in mind to try to prevent these massive crashes going on in the stock market, because again, you have pensions and everything else that are relying on this, and if they crash, then a lot of people are, elderly and they can't afford rent or anything, and so then you have an even bigger problem on your hands. So you have to understand the way the system works in general. So again, very interesting time. I didn't really talk about bonds that much, but bonds are very important. Again, we started to see a correction here. Again, people are trying to play this. You have to wait till the Fed announce rapid cuts. It has to be rapid cuts. 25-point basis move isn't going to move the bonds that much. It has to be a 100-point basis move. That's when you start to see panic. When you see actual action from the Fed that is showing panic, that is when you buy bonds, or else you're going to be sitting in bonds and continuing to play this chop. Although this was a good run up, again, it will continue to consolidate and play this nastiness until the Fed actually do start cutting, which I believe, again, they're very, very close to that happening. Again, they're calling out these other areas that are not producing the correct data. So, but as of right now, I think it can recover at least to 150. To even look back at this, at these older, I don't know about 150, maybe 120. Let me look at this. This is 3-year max month. Yeah, I think 120 would be more reasonable as opposed to the 179. I don't think we'll see that for a long period of time. I don't think there'll be that much fear in the market, but you never know. But I think reasonably, you could potentially be looking at 125 once the bond play happens. Again, once they start cutting rates is when we run. When they start increasing rates is typically when the bonds start selling off pretty heavy. So again, we're at numbers we haven't seen in a very, very long time. So we'll continue to watch and see how this plays. Again, I think it will be one of the biggest moves when the Fed start rapidly cutting. They'll announce it, and then it will take a couple of days after the fact before they actually implement that. That gives you enough time to try to take a position before they actually start cutting. So just keep that in mind. So with all that being said, again, thank you for watching. Go ahead and drop a like, and I'll see you guys on the next one.